afternoon. Welcome everyone to join our webinar on E-Invoice 2025, your compliance guide. My name is Hani and I'm the accounting supervisor at Premier TNC Malaysia Sdn Bhd. It's my pleasure to be here with you today. For today's webinar, we would like to focus on a few topics which are related to the introduction of E-Invoice, key updates on the E-Invoice, latest E-Invoice implementation timeline, challenge faced by the market. In 2023, the Inland Revenue Board of Malaysia announced that e-invoicing will become mandatory for B2B, B2G and B2C transaction. The objective is to streamline the invoicing process and move away from the paper-based system. Implementation is being rolled out in phases, beginning with Phase 1 in August 2024. We are currently in Phase 3, with Phase 4 fast approaching. This transition is not only a regulatory requirement, but also a chance for business to modernize their operation and embrace more efficient process. For those of you who may be new to this concept, let me quickly recap. An e-invoice is a digital proof of transaction between supplier and a buyer, completely eliminating paper invoice. These invoices are sent through the government portal for real-time validation and record keeping. The implementation schedule and targeted taxpayer for Phase 3, 4 and 5 have been revised. This means there are changes to both the timing and the categories of the taxpayer who will be required to comply. It is important for business to review the updated schedule to understand when their obligation begins. This table shows the updated e-invoice implementation timeline. Each business should take note of its rollout date, which is based on revenue and phase it fall under. Right now, we are in Phase 3, with Phase 4 just around the corner. By July 2026, e-invoicing will be mandatory for all business, so it's important to start preparing early. The key message here is that every business, no matter the size, will eventually need to comply, and the earlier you get ready, the smoother the transition will be. While e-invoice offer many long-term benefits, businesses are also encountering a number of challenges during the transition. Compliance is one of the biggest concerns, especially when it comes to a meeting for a specific technical requirement set by the Inland Revenue Board. For many companies, moving from manual system to automated invoicing is no small task. It involves adopting new technology, integrating with existing system, and providing training to staff. Using accounting software or API provides several key benefits. First, it significantly boosts efficiency. The software integrates with your existing system, automates much of the invoicing process, and reduces the risk of human error. Second, it helps ensure compliance with the latest regulation. These solutions are designed to stay updated with changes to the e-invoicing rule, which reduce the risk of mistake and potential penalties. And finally, with dedicated technical support from software vendors, business can resolve issues quickly with confidence, ensuring that their invoicing system continues to run smoothly. So, how do you prepare the e-invoice implementation? Here's a step-by-step guide to help your business get ready. First, know your rollout date. Find out when your business will need to start issuing e-invoice and plan accordingly. Second, get your system ready. Make sure your current invoicing system can handle the integration or switch to a compliant accounting software like AutoCount. Third, train your team. Staff training is critical to ensure smooth adoption to the new system. Fourth, communicate with your customer. Let your customer know about the changes as they may need to adapt their process too. And lastly, start issuing the test e-invoice. Before full implementation, test the system to identify and resolve any issue early. Implementing e-invoice ahead of the mandatory deadline helps streamline your process, reduce error, and ensure smoother compliance with regulation. This proactive approach will help mitigate the risk of penalties. Premier is the official dealer for AutoCount software. If you are interested to to subscribe to the AutoCount software or have any queries regarding the software, feel free to contact us and we will assist you accordingly. Now, I would like to shift our attention to the penalty for non-compliance. Let me highlight the consequence for failure to issue an e-invoice. Under Section 120 in bracket 1 in bracket D of the Income Tax Act 1967, failing to issue an e-invoice is an offence. Penalty range from a fine of Rm200 to Rm20,000 or imprisonment of up to 6 months or both.